Morning everyone. Today for the IBPS PO Mains 2018 we are covering the last concept of banking awareness. So banking awareness 6 sessions we have done till now, in which we have taken you through all the important concepts that are there from the banking industry that are relevant for your examination. Today we are going to do the miscellaneous banking concepts. So earlier we have done history of banking 1 and history of banking 2. Also we have done RBI functions and RBI rates and policies and all of the other concepts that are there from the topic of banking, like types of banks and all other concepts. So today we are looking at banking concepts. Some of the terminology, some of the concepts from the banking industry that you should be aware of in order to solve questions that you get in the GK part of your examination. So that will be the goal for the class today, understanding important banking concepts. For example, lots of things are there that we are there in banking that we are somewhat familiar with, like for example the concept of checks or the concept of ATM or the concept of online transaction. Right now a lot of people are doing transactions online, so a little bit about that is very important to know. कैसे आप ट्रांसफर करते हैं पैसे ऑनलाइन, what are the different ways of transferring money online and some of the differences between them. Also a new concept of banking that has come in the country that is called as payments bank. उसके बारे में भी हम आज एक बेसिक जानकारी लेंगे जो आपके एग्जाम पॉइंट ऑफ व्यू के लिए काफ़ी इंपॉर्टेंट है. तो फर्स्ट ऑफ ऑल विल सी टाइप्स ऑफ अकाउंट्स. जब हम बात करते हैं बैंकिंग की तो सबसे पहले बात आती है कि बैंक में लोग क्या करते हैं. जो लोग हैं बैंक में अपना खाता खोलते हैं, अपना अकाउंट खोलते हैं और उसमें डिपॉजिट करते हैं. सो वन ऑफ द की फंक्शंस ऑफ अ बैंक इज टू एक्सेप्ट डिपॉजिट्स फ्रॉम द कस्टमर. दैट इज द मेन फंक्शन इन फैक्ट यू कैन सी फ्रॉम विच द बैंक स्टार्टेड देयर जर्नी. कि बैंकिंग का कॉन्सेप्ट क्या था कि लोगों से उन पैसे रखना बैंक में फॉर द पर्पज ऑफ सेफ्टी, कि पैसा बैंक में सेफ रहे. और ग्रेजुअली वो कॉन्सेप्ट डेवलप हुआ टुवर्ड्स गिविंग रिटर्न ऑन इंटरेस्ट. तो रिटर्न बोलते हैं, इंटरेस्ट देते हैं कस्टमर्स को. सो बैंक्स इंटरेस्ट कैसे देते हैं, जो पैसा डिपॉजिटर्स का है उसको वो लोन देते हैं या इन्वेस्ट करते हैं, उससे जो पैसा कमाते हैं उसमें से वो इंटरेस्ट देते हैं लोगों को. तो जो कॉन्सेप्ट है बैंक्स का वो स्टार्ट ही होता है एक अकाउंट के साथ. When we talk about a common man's association with the bank, तो हमारी क्या एसोसिएशन है बैंक के साथ. Most of us are associated with banks with respect to having an account in a bank. तो बात करते हैं बैंक में अकाउंट खोलने का, तो कितने तरह के अकाउंट हैं यहाँ पे. 4 तरह के अकाउंट है मेनली. एक है करंट अकाउंट, एक है सेविंग्स अकाउंट, एक है रिकरिंग डिपॉजिट अकाउंट, एक है फिक्स्ड डिपॉजिट अकाउंट और एक और तो है डीमैट अकाउंट, वो हम अलग से देखेंगे. सबसे पहले बात करते हैं व्हाट इज करंट अकाउंट. तो करंट अकाउंट का मतलब क्या है एंड व्हाट इज द डिफरेंस बिटवीन करंट अकाउंट एंड सेविंग्स अकाउंट. सो करंट अकाउंट इसको चालू खाता भी बोलते हैं. एक होता है चालू खाता, एक होता है बचत खाता. तो जो चालू खाता है दैट इज करंट अकाउंट यूज्ड फॉर डे टू डे ट्रांजैक्शंस ऑफ बिजनेसेस. क्या है, लोग जो है सेविंग्स के पर्पज से जब अकाउंट खोलते हैं दे डिपॉजिट मनी इन देयर सेविंग्स अकाउंट, बट दे डोंट डू ट्रांजैक्शंस ऑन अ डे टू डे बेसिस. क्लियर. एटलीस्ट आजकल लोग हैं वो डेबिट कार्ड यूज कर रहे हैं डे टू डे ट्रांजैक्शन के लिए. लेकिन इफ यू गो बैक एंड सी अर्लियर द मेन कॉन्सेप्ट ऑफ द सेविंग्स अकाउंट वाज टू एक्ट एज अ सेविंग्स डिपॉजिट फॉर द कस्टमर, जहाँ पे वो पैसे बचाते थे और बाकी घर के जरूरतों के लिए जो पैसे होते थे वो खुद के पास रखते थे एंड दे वुड स्पेंड इट ऑन देयर डेली रिक्वायरमेंट्स. क्लियर. Current account is not that kind of an account. It is an account where people are running a business and they need some money every day. They have transactions every day. They pay checks to their vendors and they accept payments from their customers. और जो बाकी उनके जो ज़रूरतें हैं, the other requirements of a business, operating expenses are there. So when you open a business, the first thing that you do when you start a business, the first thing that you do is to open a current account. तो एक ये हो गया. मीनिंग व्हाट इज करंट अकाउंट. करंट अकाउंट मेनली इज बिजनेस अकाउंट. उसको ऐसे हम लोग कर सकते हैं ध्यान पे. ये करंट अकाउंट क्या है, मेनली बिजनेस अकाउंट. एवरी बिजनेस मस्ट हैव अ करंट अकाउंट दैट इट शुड ऑपरेट. तो डिफरेंस क्या आता है करंट अकाउंट में कि करंट अकाउंट में यू डोंट गेट इंटरेस्ट. जो पैसा आप रखते हैं अकाउंट में, द मनी दैट यू डिपॉजिट इन योर करंट अकाउंट, सपोज यू हैव 5 lakhs or 10 lakhs or 20 lakhs in your current account, the bank is not going to pay you interest on that. That's the first thing. Benefit is that there are more number of transactions that you can do. So number of transactions and services that are provided to a corporate account holder. So कहीं कहीं बैंक में आप corporate account भी बोलते हैं, business account or corporate account. Number of transactions that you can do is more, and number of check leaves that you can get is more. There are other services like you can take ओवरड्राफ्ट फैसिलिटी इज अवेलेबल, जैसे आपने पैसा रखा है, आपको कुछ पैसे एक्स्ट्रा चाहिए तो आप ओवरड्राफ्ट ले सकते हो. ओवरड्राफ्ट, सपोज आपके बैंक में सिर्फ 3 लाख रुपए, आपको चाहिए 5 लाख. अगर आपकी कंपनी की जो बैंक के साथ में जो अकाउंट है आप अच्छे से मेंटेन कर रहे हो, देन यू कैन अवेल द ओवरड्राफ्ट फैसिलिटी वेयर यू कैन बोरो मनी फ्रॉम द बैंक फॉर योर अर्जेंट रिक्वायरमेंट एंड देन लेटर पे इट बैक, क्लियर, विद इंटरेस्ट. सो ओवरड्राफ्ट फैसिलिटी इज ऑल्सो अवेलेबल इन द करंट अकाउंट. क्या फैसिलिटी का नाम क्या है? ओवरड्राफ्ट. So overdraft facility is also available for current account holders, which is not there for savings account holders. So main differences देखिए आप यहाँ पे. पहले तो इंटरेस्ट जो है वो नहीं मिलता है. नंबर ऑफ ट्रांजैक्शंस ज़्यादा है कंपेयर टू सेविंग्स अकाउंट्स. नंबर ऑफ चेक लीव्स ज़्यादा है. ओवरड्राफ्ट फैसिलिटी है, ठीक है. और रिमेनिंग अदर फंक्शंस ऑफ ट्रांसफरिंग मनी ऑनलाइन, रियल टाइम, ग्रॉस सेटलमेंट, वो सब कुछ कर सकते हैं तो मे बी एक सेविंग्स अकाउंट नहीं कर सकता है. So that is one thing that we have in, but there are some charges also. So current account will always have a minimum deposit. So this you must remember. A current account cannot be opened with a zero balance account. Okay, it has to have a minimum balance. And if you don't maintain a minimum balance, there will be charges, and there are very heavy charges for not maintaining minimum balance in a current account. Some types of savings account come with zero balance accounts also, particularly the ones which were opened under the Pradhan Mantri Jan Dhan Yojana. But current accounts are not like that. So 4-5 points I have explained to you, the main differences between current account and savings account. Savings account is more for a personal account of a person. It's a personal account in which you deposit money and the bank pays you interest. So एक ये हो गया कि ये personal account है. Number of transactions limited है, number of check leaves issued to you are limited. Next is that you get interest, you get annual interest, 4% to 6% interest depending upon different banks that you have there in savings account. So savings account is the primary purpose of savings account is to save money and keep that in bank and earn interest based on that money that you have saved, so that your money grows, it is safer in the banks, and also you are getting interest on your money. So that is about personal account. So the account that most people have in their account in which they get their salaries, right, those are your savings account. It can also be called as a salaried account if it is directly related to a company and from the company's salary gets credited into your salaried account. But you can also deposit your own money in your salaried account. So salaried account is a type of savings account. Next comes recurring deposit account. Recurring deposit account is say an account which is a term deposit account. मतलब कि ये account पे जो पैसा रहेगा वो कुछ सालों तक locked रहेगा. You cannot withdraw money from it. So suppose if I open a recurring deposit account for 5 years and every month I deposit 100 rupees or 200 rupees in that recurring deposit account, then after 5 years period is over, then I can withdraw all the money along with the interest accrued on my recurring deposits and deposits that I was doing every month. So those accounts in which you deposit money every month, but you cannot withdraw money from that account, right? You can withdraw money only after the period of the recurring deposit is over. So if you have a 5-year period or 3-year period, you can withdraw money only after that period is over. And what is a fixed deposit account? It's also a term deposit account. So ये दोनों है term deposit accounts. Both of these are term deposits because you can take out money only after the term is over. So if you have a fixed deposit for 3 years, then you can take your money after 3 years. You cannot withdraw money before 3 years. If you withdraw money, there will be certain fine on that. So both of these recurring deposit accounts and fixed deposit accounts are term deposit accounts. So term deposit accounts बोल सकते हैं इनको. So यहाँ पे क्या है difference क्या है? Recurring deposit में we deposit money every month, so for the first month, second month and so on, whereas in a fixed deposit account there is an initial, say in this case there is an initial single deposit that you make. So you make a deposit of 5 lakh rupees and then you keep that for 3 years and then you withdraw the money after 3 years. So initial single deposit is there, single cash deposit we can call it, and recurring means the deposit is recurring. Both of these are term deposit accounts and have higher interest rates compared to savings account. Now you will see a number of times the word CASA is used in banking. So you say, what is the full form of CASA? So CASA full form is current account and savings account. This you should know, current account and savings account. So CA is current account and SA is saving account. Now what all do we can tell about these 4 types of accounts? So we can say that the first 2 types of account, that is current account and savings account, these two are also called as demand deposits. What are they called as? Demand deposits. Why are they called as demand deposits? Because you can demand the money from these deposits whenever you want, whereas recurring deposits and fixed deposits are called as term deposits. So you see the difference, these are demand deposits, these are term deposits. The demand deposits are demand liabilities of banks and term deposits are term liabilities of banks. So when you see the word NDTL, net demand and time liability, so ye kya hai? NDTL. For example, we say that the cash reserve ratio CRR is 4% of NDTL. So what is NDTL? Net demand and time liability. Net demand and time liability. So ये क्यों बोल रहे हैं हम लोग net demand and time liability? Because some liabilities of the banks are demand liabilities, that is demand deposits, and some liabilities of the bank are time liabilities, like for example term deposits. So the total of this net, that means net of demand and time liability, is called NDTL, and CRR or SLR, that is statutory liquidity ratio, both of these are represented as a percentage of their NDTL. Okay. Now we have seen the types of accounts. Let us see what is a check. So a check is a negotiable instrument. So first of all you see negotiable, transferable. What is the meaning of negotiable? So it's transferable. Now we have discussed this earlier also while discussing the financial market, capital market, these concepts. So a check is a negotiable, that is transferable, and what is an instrument? A written document. A written document that is an order to pay, right? So written document. So a negotiable instrument that is transferred from one person to second person, that is ordering the bank that you have to pay this much money to this person or to transfer this much money to the account of this person, that is what is called a check. Clear? Now let us look at a dummy check, a sample check. In check what do we have? We have pay. So the person who is getting the money, right, that's of name, in favor of. So this check is in favor of which person? So this will go as in favor of. So name of the person, name of the person or company, name of the receiver, the one who is receiving, the payee. The one who is paying is the payer and one who is receiving is the payee. Now amount will go here, amount in words will go here, and amount in numbers will go here, right. This is for the date, and if you want to transfer this to a particular person, you can send a cross check. Clear? Now if you want to transfer it to only the account of the person, we can use a cross check. What else do you see in the check? You see the account number of the person is there, the account number here, the account number will be mentioned, IFSC code, IFSC code is also there. So this is the IFSC code of the account. Clear? Now IFSC code is normally used for online banking and online transfer of money. You see it is containing the code of the bank for you can see SBIN, State Bank of India, and 3 and 4, 7-digit number. So total it's got 11 characters. How many characters are there in the IFSC code? 11 characters are there in the IFSC code. That's one thing you can remember. What is IFSC? In fact, if we are writing IFSC, then you don't have to write code after this, because in IFSC, C stands for code. What does C stand for? C stands for code. So we can say IFS code, as you can see here, IFS code, Indian Financial Services Code, Indian Financial Services Code, that is IFSC. Okay. Now that's there, always 11 characters. First letters, 3 to 4 letters, which are there, 4 letters, are for the bank, and then we have the branch code for the branch. Okay. So IFSC code is decided based on the name of the bank and the code of the branch of that particular bank. Now what is this 6-digit numbers here? What do these 6 digits represent? So these are the 6-digit check number. What is there? The check number is there. These 9 digits here, you see, 3 and 3 6 plus 3 9. These are based on what is called as the magnetic ink character reader. MICR code is a 9-digit code. Clear? So code for the bank and code for the branch and code for the account, like that, we have the IFSC code, and these are your account codes. This is basically the account code. Clear? This is a serial number for service number. Clear? So everything in the check, it has some meaning which we must understand how it's going to, what is the meaning. So every number is there which has got a meaning to it. So check goes to the clearing house, and using the check truncation system, CTS. What is CTS? Check truncation system, which is basically for fast clearing of check. It is cleared and then it goes to the account of the person to whom the money has to be transferred. So all of these things we have to understand. Right now the validity of the check is 3 months. So what is validity? Valid for 3 months. Earlier it was 6 months, but now a check is valid only for 3 months. After 3 months, the validity of the check is over. So we have seen very clearly what all of these things mean. Let's now see things to know about checks. So first is, a check must be drawn upon a bank. So which bank is the one who is going to pay? That is drawee. And a check must be signed by the person drawer issuing the check, the one who is paying money, and the check must have the name of the recipient. The recipient is called payee. The one who is paying is called drawer or payer, and the drawee bank from which the money is getting transferred. And check must mention the amount of money in words and figures, in words and digits, and check must be dated. If the date is not there, the check will be invalid. And currently checks are valid for a period of 3 months. That's again one thing that we have already discussed in the previous slide. So converting physical checks into electronic checks is what is called as check truncation system, CTS. This helps you in transferring the money faster. Clear? Sending the electronic version of the check from one branch to another branch, outstation branch, allows the check to be cleared fast. Otherwise earlier it would take 8, 10 days, 12 days sometimes for check to be honored. Alright, so we have seen these are things to know about checks. Next we see classification of checks. So these are local checks. A check can be local if it is issued by a bank in the same city. That's one classification. Outstation check, that means if it is from another city, the bank from which the check has been issued is in another city. Then at par check is a check. So this is something pay at par. You will see in a lot of checks, you will see this written there, pay at par. So what is this meaning of pay at par? So see here, accepted at par means at value at all its branches across the country. Unlike local checks, it can be present across the country without attracting additional banking charges. So additional charges will not be levied on these checks. To clear the checks, the bank cannot levy any charge. Pay at par means whatever value is there, that value has to be transferred to the account of the person for whom the check is intended. The person, we call them as payee, right? So that is the meaning of pay at par. Par means equal. So no additional charges for clearing the check. Normal value checks. Checks below the amount of rupees 1 lakh are called as normal value check, and high value checks, checks bearing an amount higher than rupees 1 lakh are called as high value checks. So local checks are there, outstation checks are there. At par check means no additional charges, and whatever amount is written, that will be transferred to the account of the person. Normal value checks below 1 lakh and 1 lakh or above is called high value check. Gift checks are checks used for gifting money, and the value may vary from 100 to 10,000 rupees. That is called a gift check. Now you see here, in addition to these, there are also other types of checks based on what is an open check. A check is open check when it is possible to get cash over the counter at the bank. When you can take the check and you can go to the bank and get the money, then that check is called an open check. Bearer check. A check which is payable to any person who presents it for payment at the bank is called a bearer check. So pay to the bearer, clear? So that is called a bearer check, and it can be transferred by mere delivery and requires no endorsement. Next is your order check. It is the one which is payable to a particular person. So pay to this person, then we say this is an order check. Next we have cross check. Just now we have seen when a check is crossed, like in the corner of the check you write here cross, or you can write here A dot C, like this, A dot C. That means it is an account pay check. Now it cannot be encashed over the counter as open check, bearer check or order check can be done. It will be only transferred to the account of the person, then it is called a cross check. We also have a self check. A self check is written where you are the payer, you can say the borrower, drawer, the one who is drawing money, and the payee, the one whom the money is being paid to, are the same person. So that is called a self check. So if your ATM card is not working and you want to withdraw cash, you can use a self check to withdraw cash from the bank. Post dated check, that means the date of the check is in advance. So I am giving you a check today, but the date is of 15th of December 2018. Now you cannot encash it till that date, so that is what is called a post dated check. Sometimes when companies give you EMI, they ask you to submit some post dated checks that the companies can then deposit into their account and the money can get transferred into it. Now with ECS, post dated checks are not required. Electronic clearing system, that is called as ECS. So once you have signed the ECS document, automatically the amount will get debited from your account and into the account of the payee. Alright, a banker's check is a check where the bank, issued by a bank, drawing money from its own funds rather than that of the account holders. Normally when I say I am giving a check, that check, the amount is going to get deducted from my account. So the bank is paying money from my account. But if a banker's check is given to someone, the bank will be paying money from the bank's account, its own funds, and not from the funds. So you can think of it more like a draft, clear? And that is what is called a banker's check, and normally for high purchase transactions using real estates and other such things, then we use a banker's check. A traveller's check, earlier when ATM cards, debit cards were not there and a person had to travel from one city to the other city, then it was not safe to carry lots of cash. So what people would do, they would go to their respective banks and they would, or any bank they want to, it's not necessary that you have to have an account in a bank to get a traveller's check. You can go to any bank, you can take the traveller's check form, fill that how much money you want, give that money to the bank, and the bank will give you a traveller's check. This traveller's check you can then go and encash in any branch of that bank in any of the cities. That way your money would be safe. That is what is called a traveller's check. Next is to understand the difference between RTGS and NEFT. So first of all, what is NEFT and what is RTGS? Both of these are methods of transferring money electronic. So electronic fund transfer. These are all methods for electronic fund transfer. In fact, this NEFT is National Electronic Fund Transfer. These are methods of transferring money electronically, and RTGS is real time gross settlement. So both of these are ways in which you can transfer money from your account to any other person's account. Clear? National Electronic Fund Transfer and RTGS. Now we have also other ways like IBPS, UPI. Okay, so that is Unified Payment Interface, and IBPS, Instant Mobile Payment Service. So these are also new methods of transferring money online, but let's understand these two main terms. One is RTGS and one is NEFT. Both of these are electronic transfer. The difference you see here is that National Electronic Fund Transfer, when you transfer someone money using NEFT, the money is transferred in batches. For example, let's say there is a batch transfer that is going to happen at 12 o'clock, and if you transfer the money at 10 o'clock, then your money will wait till 12 o'clock, and along with a lot of other people in batch it will get transferred. Clear? So sometimes the money might not reflect immediately into the account of the other person. Alright. Now in real time gross settlement, it happens in real time. So if I transfer the money now, the money goes instantly. It is not settled in batches. That's the main difference between NEFT and RTGS. Also, the minimum amount of transfer required for RTGS is rupees 2 lakhs. There is no upper limit for RTGS, there is no upper limit for NEFT also, and there is no lower limit for NEFT. But for RTGS, real time gross settlement, this you must remember, the minimum is 2 lakh rupees, and there is no upper limit, while in NEFT there is no limit, either minimum or maximum, on the amount of fund transferred. However, maximum amount per transaction is limited to rupees 50,000 for cash based remittance within India, and also for remittance to Nepal and others. So this is what is there in the RBI website. What is the difference between NEFT and RTGS? One is very clear. NEFT happens in batches, RTGS happens real time gross settlement. In NEFT there is no minimum, in RTGS minimum is 2 lakh rupees. Alright, so this much you remember regarding NEFT and RTGS. Next is we will see 4 terms just to understand what is financial inclusion. Basically is a terminology from which various questions came in banking exams in 13, 14, 15, even 16. This is based on the concept where banking is being taken to the unbanked, those segment of our population, those who don't have access to banking, bringing them also under the umbrella of banking services, so that everyone has access to banking is called financial inclusion. It was under financial inclusion that Pradhan Mantri Jan Dhan Yojana was launched. Okay, what is anywhere banking? See, anywhere banking is a modern banking concept where banking services are not limited to banking hours. Earlier, if you had to let's say transfer money to pay someone some amount or take some money out of your account, you could do that only during the banking hours 9 to 5. But today, with electronic payment systems, online transfer of money, right, ATM kiosk available from where you can draw money, and also using your debit cards you can pay money at the point of sale using that EFT POS, that is electronic fund transfer at point of sale, EFT POS. Now you know EFT is electronic fund transfer, P is point. So you can pay money at the point of sale using the card swiping machine. That is what is called as EFT POS. So because of all of these facilities coming together, today banking is not limited to banking hours, can be done from anywhere and at any time, and that is what is called as anywhere banking. What is a universal banking? See, ICICI Bank was the first universal bank of India, bringing all financial services under the roof of banking services, under a bank, under the commercial bank. If they also start selling or engaging in other financial products like mutual funds, insurance, right, then that will become a concept of universal banking. That is, the bank is now not limited only to the traditional banking concepts like deposits and loans, but is also doing other types of providing other services all under one roof. Mutual funds, insurance, all of these under one roof along with the traditional banking services. That is what is called as universal banking. And remember, this ICICI Bank was the first universal bank of India. Now, what is narrow banking? Now, it is not the opposite, you can say, of universal banking. Narrow banking is a concept where banks, you see, when depositors deposit their money in a bank, the bank uses that money to give loan to others and to invest that money in shares and mutual funds and other such financial products, so that banks can earn money through that, and then they can share a part of that as interest with you. Now, what is narrow banking? In narrow banking, banks will use majority of their funds, right? They'll invest majority of their funds only in government securities. That means it will be a very safe investment for that. They will not be investing in those high risk shares and mutual funds. They'll only be investing their money in government securities. This is what is called as narrow banking. Alright. Now, next we will see what are payments bank. So, payments bank are a new type of banks that were launched in 2015. In 2015, RBI gave license to 11 corporate entities to start payment banks in the country, like Airtel Payments Bank, and then we had Paytm Payments Bank, and so many other companies were there. We had this concept of Fino's Payment Bank, Fino Payments Bank. So, 11 payments bank were given licenses to open payments bank in our country, so that banking can go to everyone, and that is also under financial inclusion. So, understand, payments bank also came under financial inclusion, so that you don't have to actually get the access of traditional banks in order to have bank account. You can go to an Airtel counter and you can deposit money there, and you can do some of the basic banking services from there. That was the purpose of payments bank, also to encourage cashless transaction. That is also one of the major points behind payments bank, to encourage cashless transactions. So, how many entities were given? Corporate entities were given licenses. 11 corporate entities were given licenses, but 4 of them have submitted, and right now you see only 6 payments banks are operational in our country. 6 payment banks are operational. So, you can say it is a differentiated bank, and it will confine its activities to acceptance of demand deposits and remittance, internet banking and other specified services, but cannot take lending services. Lending is not allowed. What is not allowed? You see, a payments bank cannot lend money. What can it do? It can take money. Lending is not allowed. Deposit is allowed. Withdrawal is allowed. Remittance is allowed. You are trying to remit the money to someone's account. Okay, we can withdraw money. You can use it for paying online for different services. You can pay your bills. You can transfer that money into someone else's account if they have a payments account in some other payments bank, or to someone's account in a traditional bank also. You can deposit money, withdraw money, you can buy, you can shop, you can do all things, but you cannot lend. Clear? So, that is one thing, that is the difference between a payments bank and other traditional banks. And what also you should know, very important point, they can accept deposit only up to 1 lakh rupees. That means the maximum balance which can be there in your account, maximum deposit is also 1 lakh and maximum balance is also 1 lakh. Clear? They cannot take deposits more than 1 lakh in any account. They can issue ATM debit card, but not credit cards. Again, credit cards not allowed. ATM debit cards can be issued by a payments bank, and also they cannot accept fixed or recurring deposits. So, they are not allowed to take fixed deposits or recurring deposits. Usually, payments bank offer higher interest rates on their savings account as compared to traditional banks. That is one thing about payments bank. And how many payments banks are operational right now? And according to RBI's website and the second schedule of RBI, Airtel Payment Banks having headquarters in New Delhi, Paytm Payment Banks, which I am sure most of you have used. Understand the differences there between a wallet and a payments bank. For example, any bank like HDFC can have a wallet, and we can have ICICI Pockets is also a bank wallet through which you can do certain online transactions. That is not a payments bank. A payments bank is one which can take deposits from customers, alright. So, this is why these are different from just having an e-wallet, a mobile wallet. Now, Paytm Payments Bank, headquarter Noida, Fino Payments Bank, Navi Mumbai, Indian Post Payments Bank is the only payments bank which is a public sector company. It's a public sector bank, and I have discussed this earlier also in detail about what is Indian Post Payments Banks. If you want to see more about it, you can go to the previous video on types of banks in which I have covered this in detail. Jio Payments Bank, again headquartered Navi Mumbai, and Aditya Birla Idea Payments Bank, that is again in Mumbai. So, except Airtel and Paytm, which are New Delhi and Noida, other 4 payments bank have the headquarters in Mumbai. Alright. So, that is about payments bank, which is the very latest concept from banking. So, next we will see what is white label ATMs. There were questions earlier based on white label ATMs. ATMs operated by corporates. You see, ATMs are basically from banks. When you go to an SBI ATM, there is the SBI logo there. It's a bank which is ATM which is maintained and operated by State Bank of India. But now the number of ATMs in our country are very less compared to number of people who are there. So, to encourage more number of ATMs, what is done? White label ATMs are ATMs, WLAs are ATMs that are run by non-bank entities. That is one concept that you can know. And difference between ATM and white label ATM, and logo displayed on the ATM machine is that of the corporate company, not of the bank, and cash deposits are not accepted at white label ATMs, and it is not permitted by the RBI, because it is not permitted by the RBI. So, you cannot deposit cash in the ATM, you can withdraw cash, and when you go to the ATM, you will see the logo of the corporate company, not the logo of the bank. So, that is a little bit about these important banking concepts that can help you solve some of the questions in your examination. Now, the time for the class practice pack, in which there are 10 questions from this topic. Those who have passport access will start solving the questions once you hear the sound. So, best of luck to you for your examination, and thank you for watching the video.